Thank you for joining us for another episode of Any Given Monday. Today's guest is Hudson Etienne, and we actually want to make sure we share that if you're interested in joining as an episode sponsor, please feel free to reach out to me directly. We have info at N18, which is the best way to do that. And you can find out how to sponsor an episode, a series, if you're interested in promoting your business or an upcoming event. We do not have pay per play. So if you're sponsoring an event, it's not because you are sponsoring an episode. You're not a guest because you're sponsoring an episode. Just want to make sure everyone is clear on that. So give us a second. I'm going to bring up myself first, and we'll have Hudson on in a moment. But the focus right now is to share the reason why we're doing this series and why this particular conversation is very important and timely. So I'll share some personal information, which is I had the honor and pleasure of making my first hire. And in doing that, I hired as a contractor, which was not correct. And I didn't find that out until later after speaking to Hudson and just kind of understanding what the premises are of hiring an employee versus hiring a contractor. And I think as business owners, we often are looking for the wisest ways to take on additional expenses, but manage to do our work as well. And understanding what the ramifications are of making these decisions is rather important. But we try to just get through each task and each thing that we need to do and not really think about how is this structured and what is the best thing for me right now. Is this short term? Is this long term? Do I want this indefinitely or not? And so one of the things that Hudson will talk about, and he'll introduce himself in a moment, is just the conversation around being able to identify, do I have an employee or not? And then we'll talk about, I'm happy to share a very personal situation of how we remedied that decision that I incorrectly made. So let me bring Hudson on. Hi, Hudson. Thanks for joining us on this episode of Tease Me.
Hello. Are you able to hear me?
Yeah, I can hear you just well, just
Awesome.
perfectly. I was sharing how I had a personal situation where, being able to identify a contractor versus employee is rather important. But let's take a step back. Tell us, the audience and everyone listening, about your practice and why it's important for business owners to have a relationship with their accountant.
Okay. My practice, first of all, is so I run probably three separate companies, right? So the first one is Tax DRx, which you referenced. It's the main entity, and there we do tax resolution work, which is representing taxpayers, both individuals and business owners who get themselves into trouble with the IRS. And what that might look like is going before the IRS in an audit situation, or we have non-filers who over the years haven't even filed taxes, so we get them caught up with that, or they file taxes and have balances owing and have no idea how they're going to address it. And so we help settle those out. So that's the first company. The second company is getmybooksright.com. So Get My Books Right basically works with small business owners because, as in my experience, that's the area that the small business owner drops the ball the most. Because as small business owners, and I'm one of those, when I first started out, it's all about the hustle, right? We got to get the next client, get the next project, get the next deal, get the work done, and get the check, right? Grab the bag. But we drop the bag because the first thing in business that as business owners we don't keep in mind is that we have a silent partner. His name is Uncle Sam. And we need to take care of Uncle Sam or else we're going to have some issues, right? And the third company is really around the, hey, what's next for us? Now that we're established, how do we scale? How do we, become even more relevant? So we have Tax DRx franchise group, which we're looking to expand using the franchise model. So back to the second question around the small business owner. So I always say in life, you need to have three specific professionals on speed dial, right? The first is an attorney. The second is your medical doctor. And the third is your accountant. So we are, for the small business owner, we're the guys. Like, I get calls all the time. My staff and my team get calls all the time from business owners because there are decisions you're making every day that has a tax impact, right? And hey, do I lease a car? Hey, how do I leverage the use of my home on my taxes so I can write it off? How do I be strategic about going somewhere that I like going and still writing it off because there's a seminar there that I have to take anyway, right? And so it's some of those things, and we help with strategizing around that.
So, I think that last scenario was very specifically mine, because that was my question to you right before when we last met, which was, there's a conference in a very nice place. I'd like to go. Does it make sense to pay for it now? Is it a business expense? How do I do that? And you were very adamant about like just making sure we understand what our end of year expenses are. So while we have everyone listening, let's focus on getmybooksright.com and that aspect of business, because the audience that we're speaking to are more aligned with business needs and business questions, whether they're starting their business or they're running their business and trying to become more efficient. If you were to share, like, let's start with, it's the end of the year, it's December 12th. We have a good 20 something days left. Are there tax decisions that people should be talking to their accountant about right now, or people should reach out to you for and get to know like your services and how they can be supported before the end of the year? Did you hear that question? Because I saw you switching earbuds. Can you hear me? I think we're having technical difficulties. Everyone hold on. He'll be coming back in. Were you able to hear my question? Can't hear you. You're gonna have to text me then because I can't hear you. Are you able to come back on through the computer? No sound. Can't hear you.
Here you go. Can you hear me
Okay,
now?
there we go.
Yes. Okay. All right. What was that?
Okay.
That last question you asked was what?
Let's edit that. Someone in video editing. Let's go back to the question. The question is more around year-end decision. So it's December 12th. We have only like a few days left in the year. There are business owners or prospective business owners that should probably reach out to their accountant now to think about what's next. If someone were to reach out to you, what are some of the things that you think a business owner should be asking their accountant or reaching out to you for right now, timely wise?
Okay, so it all depends, right? So it all comes back to record keeping. As a business owner, where am I with my record keeping? If everything is in a shoebox, guess what? Don't even call me, because the questions that I'm going to need to ask you, and you're going to need to know as a business owner to make this major decision in the next 3 weeks or 2.5 weeks that are left, you won't be able to answer, such as, what's your gross revenues? What's your net income, projected net income for the year, right? If you don't know those two numbers, guess what? I have nothing to work with, right? And so it all goes back again to bookkeeping. So if my books are right, guess what? I know what those numbers are because I've tracked them every month. I track them every week. And it's just part of what we have to do. Like, we've played sports, right? We're golfers. Who in the hell plays golf without keeping score after every swing, after every hole? I know whether I got birdie, par, bogey, etc. Guess what? We don't do that in business. We finish the round and try to figure out what I did on hole number one. Yeah. What did I do in January again? I know I made some money, but that's not the way it works. We got to treat our business like it's a game. We got to keep the score.
So, okay, so let's take a step back. There's probably a business owner that has been like maybe bootstrapping or like running their business. They have their LLC, they're selling things here and there. They're probably not keeping, good receipts. Maybe they're not even taking credit card payments. Maybe everything's cash transactions. You have Get My Books Right. How how would someone work with you in that case? So we're talking about the beginner entrepreneur that they have already formed whatever their business structure is, but
Right.
their books, like there is no, maybe there's two things. Can you define what books and records even means for someone? Because we say these things as if everyone knows, but if you didn't come from like finance or banking or certain industries, you may not have any familiarity with what that even really means or what that looks like. So start with
Okay.
like defining that for the average, individual.
Sure. So big books and records as defined, just in layman's terms, is from a week by week, at least monthly, you knowing the total income that came in, right? And all the expenses by category.
Hmm.
So we might know, okay, this month I made 10 grand and I spent five, but the five that you spent was 2,000 to advertising. Was it 2,500 to, supplies and equipment, etc. So, and then because we have to report it by category, so you have to track it by category as well. And so, depending, hey, I'm bootstrapping. I'm actually not perhaps making enough that I feel I could afford a relationship with an accountant or bookkeeper ongoingly. Well, guess what? That means that you got some homework to do because you have to put on that hat too, right? As a business owner, you have to be the CEO, the CFO, and bookkeeper, et cetera, et cetera. So you're going to spend a weekend going through all of your bank statements. And here's what we do: we go by line, start with all the deposits, record them, all the expenses, and imagine going through line by line in your bank statements and categorizing each expense. That's what bookkeeping is all about. So it may be as simple as you jumping onto an Excel spreadsheet by and doing, and we have that. We'll give you that to disseminate as a good starting point, or better yet, having a QuickBooks Online account where then you're linking your credit cards, you're linking your bank statements, and then still you have to go and reconcile them and categorize them properly. And that's what we do for our clients. That is, we manage their QuickBooks Online accounts. And that's the first basic level of getmybooksright.com. The second level is virtual CFO services, which is kind of like a top tier. Hey, now you really have a relationship because we're tracking those numbers. We're creating your critical, we call them KPIs for your business. We're defining those and tracking them so that now we're making decisions together for your business. But that's a higher level when a person is approaching 500, $1 million of income. And because those services start roughly at 2,500, where the basic bookkeeping only starts like at 297 or something like that.
So a few things. One, everyone, please note we are not advertising QuickBooks. While you have mentioned it, we are not supporting. They don't pay us to don't. So we're not advocating that as a product or a service. I happen to use a different one. Mine is Wave Apps. I think the key is just to find a system to
Oh,
place
we
your
don't. Yeah.
information.
I'm just
Unless
asking a
they're kicking
question.
you back some
So
money, and then I need a cut because shameless promotion or free stuff. We don't do that, but the products are getting promoted here. I
yeah,
did want.
as long as we get it done, it doesn't matter to us how you get it done. You get that?
Right.
Um, and I think in the beginning you were talking about the classification of employee to employee in 1099
Contractor. Yeah.
contractors, right? So as employers, we have to determine, like the IRS looks at, okay, how much control do you have over that person, right? Do you tell them what time to start, what time to end, what to do, and can they get fired? And secondly, does that person, is he independently operating and they do the same thing for you? Like you're not the only person or company that they're doing this for. Like they're also rendering advertising or other services to other entrepreneurs. Well, then if that's the case, they're independent. But if you're the only person that they do that for and you have full control over them, they're probably more or less an employee.
So I think one thing to take a step back. So yeah, let's talk about that. If you're a business owner and you're trying to make that decision, but what if you don't know? It sounds like depending on who the person is, that answers the question to begin with. So if you're hiring someone or bringing someone on and they have no other business experiences, or they're looking to just work directly with you and they don't have like their own EIN number and they're not a sole proprietor, then it's almost like the decision is made right then and there, whether they're an employee or not. Does that
Right.
sound
Yeah.
accurate?
Well, put simply, what are they looking for? Are they looking for a job or they're looking for a contract?
Ah,
If they're looking for a job, they're probably your employee.
okay.
If they're looking for a contract and they've made you a proposal, then that's probably an independent contract.
Okay. So for business owners that are listening that may have to correct that, talk to them about like what ways that they can work with their accountant, because you supported me in this way as well, but what ways they would be working with their accountant or even working with someone like you to address that before the year end, I would guess.
Right. Well, let's talk about the implication of not addressing it. Right.
Okay.
Everything is all good until you're found out. You get it? So if the Department of Labor don't know that you're doing this, right? And the here's how they'll know. If your employee or that person that was the independent contractor, that contract ends and they go and try to collect unemployment, you're gonna get got. Then you're gonna get found out. And then now what happens is that the Department of Labor goes and does an audit on that employee-employer relationship. Now they're going to want their taxes that you should have paid as a result, and they'll go back to all the payments that you've made them and kind of do what we did legally, but they'll have you pay those with interest and penalties. So where, you know, and I don't, obviously I can't disclose anything as it relates to relationship with clients, but in a scenario where the taxes were, say, $1,000, you're going to pay anywhere from $15 to $2,000 in that same scenario. Okay. So fine, it's the end of the year. Yes, if it can be corrected, and see, you had an advantage in that you already had a payroll system already set up, right? That I had relationships with. So it's just a matter of going in, making the corrections, and hey, you're good to go. What about that person that doesn't even have a payroll company, who is improperly classifying their employee as contractors? Now it's going to take time to set it up, et cetera, et cetera. So my answer to them, hey, if we don't have time to fix it for 2022, let that be the first thing that we correct for 2023. Right? So it's all about making immediate corrections as we find out those errors, right? It's constant pivoting in small businesses. And so, again, I'm one that will admit I haven't done everything right, but guess what? When I make those mistakes, I don't make them again a second time. I make immediate corrections. So if we don't have time to correct it for 2022, let that be the first thing that we correct for January 1st, January 2nd of 2023, reclassifying those people, putting them on payroll, and then rolling out correctly moving forward.
And now, is that true for all categories of worker, like temporary, part-time, full-time?
It is. It is. Like we have all three types in my firm. I have full-time workers, I have part-time workers who are W-2 employees, and we have independent contractors. These are other CPAs that have their own firms but lend us a hand as independent who are 1099, and not give them a choice. Hey, how would you like to be paid? 1099 or W-2? Or do you want to be? And then I give them a contract, understanding of what their responsibilities are. They can come and go as they please. They can work as little or as much as they want, and then they get boom. They invoice me for their, compensation, right? I've never received an invoice from an employee.
Right.
I tell them what they've just earned, right? And so, like, when you think about it, it's really simple. We as business owners, we try and take shortcuts or think that we're saving money. Look, we're only talking about 8 to 10% as an additional cost. It ain't that big of a deal.
Yeah,
And
yeah. I
most
mean,
of us have the money, right?
Yeah, I think it's just an understanding too, and understanding what the penalty and the cost of not complying is, and understanding what the risk is to your business and how high that could be. But
Yep.
take a step back. You mentioned a few things that I don't know if everyone understands. You mentioned categories, and I don't know, like if you're not familiar with chart of accounts or categorization of expenses, why does that matter for an accountant to have these categories set,
Because
and who makes
see,
them up?
sometimes we overcomplicate stuff. Trust me, we know it. Income is the money coming in. Expenses is what, okay, anything that's ordinary and necessary to do that work is an expense, right? It's an allowable expense. Well, my question to you is, what was it? You're going to tell me, okay, I spent money on Fiverr for this. I had somebody do something for me. Well, that's an expense. Like all I'm saying is look at that expenditure, how much it was, and who was it to. If you tell me, okay, it was to Exxon, I know it's gas. If you tell me it was to Tax DRx, well, I know it's, business services, taxes. If you and we just go by. Now, if it's something arbitrary, you went to Walgreens. Well, how do I know that bought you didn't pay for medicine, or you bought something that was convenient for the business, something like maybe paper? Walgreens had paper, right? Or you bought some scissors that you needed quickly and you didn't have a chance to go to Staples. If it's Staples, right, we know that it's business supplies, office supplies, etc. So those are the categories. That's what I'm saying. Let's not overcomplicate it. Believe me, the business owner knows it. They're just not tracking it.
Mm.
And all we're asking is for you to track it or have someone track it, or with your scenario, hey, there are apps that are available that will help you do that. Just do it. And it's a requirement. It's not something that if you feel like and you get around to doing it, you get to do it. No, as a business owner, the IRS requires that you do this.
So you're saying from the first day that someone is a business owner and they have a legal business entity, they should be tracking their expenses from day one.
Yep. Publication 583. Go check
Got
it
it.
out. So
Got it.
yeah, I mean, they spell it out for you and they give you, hey, here's, if you do this, this is what it would do for you.
Do
It's going to
regular
help you
people
better
read that?
manage your business. It's going to help you know what's coming in, what's going out. Guess what? At tax time, you're ready. If you don't have your books, you're dreading January because you know you can't move. You remember the PPP EIDL loans? If you didn't have your financials, you couldn't even get money. Like there's so much impact in dropping this ball. It's huge. It impacts your small business multiple ways.
Okay, so let's talk about, it's December 12th. We're, coming up on the end of the year. And if you're a small business owner, there are probably two or three things that as an accountant, you're thinking people should do, just general. If you were to kind of just give a synopsis of things that small business owners should be thinking about or take action immediately on, what would those things be?
Well, first, review your P&L and balance sheet, so your profit and loss and balance sheet, and see where you are right now, right? If you're showing a profit, then the question becomes, okay, what do I need in terms of products, um, a software, an equipment, or training that if I bought for my business right now before the end of the year, I could help to lower that tax exposure. Because you remember, you're only paying the taxes on the net income, which is the profit. So that's the first question. The second question, let's say you've already, look, I have everything I need in terms of equipment, training, supplies, all that, and I don't need to spend. So I'm looking at that net. Okay, well, I have I'm not going to work forever. At some point in time, I'm going to need to retire, right? How much can I put away in my SEP that I get to write it off, right? A self-employment plan, that's, your retirement plan for the self-employed individual, a 401k, if you have that set up, that I can sock away. That's deferred. So you get to reduce your taxes by that amount. Right? It's normally anywhere from 20 to 25% of your net income. So if your net income is, say, 100,000, you'll be able to put away anywhere from 20 to 25,000. And then if you get with a very creative financial planner, they'll be able to help you sock away even more, right? If you do combined plans. And so that's really where the magic is, where now you're saving for yourself, you're lowering your taxes, right? And really positioning yourself for future success, which to me, the game in business is making enough money where you don't have to work anymore. You can retire, hang up, right? Hang up the jersey in the rafters, and now it's on, right? So that's what we want to get to. But if you're not doing the planning for retirement and lowering your tax exposure, how do you get there? So those are the questions.
No, that's excellent. That's excellent. There's one debate that I've often engaged in regarding profit versus revenue and whether or not your business is profitable. But if you're intentionally reducing your tax exposure, at what point does, when we're looking at profit versus revenue, at what point are you able to really buy it, like rate the health of your business to say, all right, my business is doing well?
Right. So it all depends on what your goal is, right? So we have different types of businesses. We have lifestyle businesses, right? And I define that as really that individual, that or group of individuals that has basically a goal. They have a business where, hey, you know what? Um, I just want a nice living. Like I don't want to like kill myself to work. I want the business to generate enough where I pay my bills and I go on vacation. I play golf. I do whatever I like to do. That's just a lifestyle type of goal, right? And you have those business owners with the goal that, you know what, it's more than a lifestyle for me, right? I want to be I want to create a legacy where, like the H&R blocks, like when I'm not around, they're still saying, "Man, that tax doctor's that guy was amazing because he created and duplicated himself so many times that even after he's passed, he's still relevant, right? Or the company is relevant." Well, see, it depends on the goal, and that legacy includes my kids, the grandkids, and everybody having still to eat from what we've created years ago. You
Wow.
see, so that's kind of like what our goal is. So everybody is somewhere in the middle. So back to your question, revenue, yeah, it's very important because if it's not coming in, bills aren't getting paid, employees aren't getting paid, contractors aren't getting paid, like you don't even have a chance of getting to that lifestyle goal, right? So but on the other side of it, we say, and it's going to sound, well, some people won't get it. I can't wait till I have to pay taxes on $1 million. I can't wait. Like, yo, this is it. You've gotten there because, look, game over, right? And people who aggressively reduces their taxes to a point, and I see it all the time, to a point where the amount that they're declaring as net income is freaking ridiculous. Right? They brought in 200,000, but they're showing that their net income was only 30. Wait a minute. For what you got, you couldn't even survive on 30,000. Right? Because you own this, you own that, you drive this, you drive. It doesn't even make sense anymore. But hey, they do have the deductions, right? And so here's how you're hurting yourself from that net income as an LLC owner, sole prop, etc. That's the income that we pay Social Security and Medicare taxes on, right? And at the end, we're going to look at those averages, and that's how where I'm saying we, like I work for the government, but that's how
I
Social
mean, you
Security
kind of,
determines if how much they're going to pay you on, and it's supplemental, but I want that supplemental income to be maxed out if I can, right? And so plus, by showing a healthy net, you can make moves. You could buy a house. Believe me, you're not buying no house with showing a net income of 30,000. Not unless you're going to Wichita, Kansas, or somewhere like that. You're not buying anything in New York or New Jersey for that matter, right? So showing a healthy income. The EIDL loan, we looked at net income to determine, hey, how much are we going to give you, right? PPP, same thing. that was such a great experience to see how like minimizing your net hurt us tremendously. And you can't, like I always say, look, you want to be intentional in life and strategic, right? Sometimes, you know what? I know that, look, I'm going to be trying to get a business line of credit. Well, they're going to ask me for my business taxes, right? And so I will intentionally show a profit because I know, hey, even if I have the write-off, I'll, you know, I'll balance it out. Because when I show that to the bank, he's like, okay, he can afford it. He's showing a profit, a net profit at the end that can go to pay for this loan that we're about to give him. All that is on the table, right? So they're both important. However, net, well, you're not going to have a healthy net unless you have a healthy gross revenue, right? But it all comes down to the net for me.
Wow. Okay. And then, like, I know we're almost close to time. When people are thinking about starting their business, is that when they speak to the accountant around which type of structure, or should they be talking to an attorney, like whether you should have an LLC or sole proprietor? Because it's
Believe
weird.
it or not, although attorneys, some attorneys know about entity types, um, a lot of them don't know the tax impact of the entity type, right? So I think it's best to speak with an accountant, and some accountants do assist in forming those entities. But more importantly, which entities should you choose depending on what the goal is and where you are in business? And we can always pivot as you grow.
Yeah.
So yeah, attorney first, see the tax implications and which entity is best starting out. And then over time, be ready to pivot and change where necessary.
Yeah. And so one last question, well, actually one and a half questions. You are working out of New York and New Jersey. What's the importance of having a presence in both states?
I was forced to come to New York because so my base is in Cranford, New Jersey. And at the time, I was advertising on Kiss FM, which is now WBLS with Shayla, and people were calling in from New York. And the first question they had for me is, okay, where's your office in New York? I don't have one. We're over here in New Jersey, though. Click. I mean, you hear enough clicks, you're going to know that you need to have a presence in New York, right? And so we set up shop over at Regis office, which is a shared office environment. We work to kind of like that too. And then finally, we just says, okay, no one knows we're here. We have an office, but you only come to us if you have an appointment with us. And we decided, you know what, let's make a bigger commitment and set up a retail shop here in Harlem, of which where we are over in Adam Clayton Powell Boulevard. And so now that I'm committed to the community, I'm here in the community, a part of it, and being a resource to the community is what I thought was important. And now, New Jersey gets, all of us, New York gets all of us, and not for nothing, New York has way more people than New Jersey do in terms of just the density and the number of clients that we can attract. So that was the decision for us. I think New York can become even a more profitable, and we can make a bigger impact here than we can in Jersey, is what I thought.
Absolutely. And I think that's one thing that's important too, because one of the things you're mentioning is around presence and then being able to set up a brick and mortar in two states. And that's where an accountant can be very important as well.
Absolutely.
Yeah. So while we're getting ready to end, any last parting words around Tax DRX if people should reach out to you or get my books right or for the virtual CFO services that you want to share with the audience?
Yeah, just check us out. And we'll keep it simple. It's taxdrx.com. We're not gonna have you going every place because you can access the others right from there. Taxdrx.com, and then all the phone numbers, email access is all there. You can drop us an email, and then by all means, we'll definitely be responsive to answering any questions. All consultations, especially the first one, is complimentary, so you don't have to, come with your checkbook or anything like that. We don't charge unless you hire us to do something. And so that's the level of resource we want to bring. So
Yeah, we're going to talk about that word checkbook because I don't think a lot of people have those either
yeah,
anymore.
yeah,
But
yeah,
thank
yeah.
you, thank you for joining
I
us.
mean, hey, I still have one. But to your point, a lot of the payments are done electronically, and so but at times I find the need to use it. So
No, absolutely, absolutely. Well, for everyone listening, it's December 12th. I advise you not to procrastinate as we enter the holiday season. If you have questions, you want to try to take care of them before the year ends. I know that there are some people that, will postpone their taxes or ask for extensions, and then there's certain decisions that don't need to be made until after the new year. But it's always better to be prepared and kind of be positioned for success. And so, thank you, Hudson, for
sure,
sharing your time and giving us some words of wisdom pro bono. And hope to see you on the golf course soon.
sure. Yeah, thank you for the opportunity to be a resource. And remember, the difference between December 31st and January 1st is before December 31st, you can actually do something about the outcome. That's through tax planning, strategizing. Afterwards, once January 1st hit, we can't do anything but actually process your return. It's over.
It's important to know, everyone. So thank you very much for joining us. And that was Any Given Monday.
Thank you.